This zone has been hit 3 times already, and traders look at this and think, okay, this zone is strong, let me go in on the 4th touch to take price higher. And what happens is they place their stops behind the zone, get cooked, and then price moves into their direction. Yeah, it failed. And it's not random. There is a specific reason that a zone with multiple mitigations behaves differently than a fresh unmitigated one. And most people trade the zone wrong. And that's what this whole video is about. Hey, so Benchina here. I trade NQ full-time. I'm funded across multiple prop firms and across multiple accounts. I've been trading NQ profitably for 2.5 years now. If you want credibility, I trade live. Every execution that I make, it's posted in the Discord. If not in the Discord, it's being shown live on stream here right on YouTube. The or the multiple mitigation zone is one of the most asked about concepts in DTFX, right? Because it has the highest win rate, and it's mostly because of the number of entries that it provides. But a lot of people get this wrong. They don't position themselves with SNZCE, right? The concept that we're going to go over next. Yeah, so the problem is that most traders really count every single zone as an with multiple touches. And I will show you guys why that is not the case later in the video. By the end of the video, I promise that if you really pay attention to what I say, you will be able to spot the same setups and trade the same way that I do. So without further ado, make sure to take notes and let's get into it. So we're going to have a brief refresher so new viewers aren't lost. We're going to go over SNZCE, and what SNZCE essentially is, it's structure, narrative, zone, and confirmation entry. These are the 4 pillars of every profitable trading plan, right? So without further ado, let's pick a financial goal, right? For most of you, it's going to be a funded account, or it's going to be 10K in payouts. I wrote down 10K to 100K live account scaling, right? Then what you're going to do is pick a trading model, right? In this video, we're going to be picking the model. We're going to be backtesting that model, right? We're going to refine our executions. We're going to find the expected win rate in demo trading and backtesting. And we're going to go live on the funded accounts and stick to our rules, right? We're going to focus on perfecting the execution, right? The execution being the trade idea, execution of the actual order, and us having a target. So first of all, we have structure. As I explained in previous videos already, we have fractal nature of price, right? So we're going to count our swings all the way from the daily all the way to the M1. We're going to counter only after the 3rd swing. This is a rule that I personally live by. I don't trade continuations after the 3rd entry because I don't want to be caught in a pullback, and I align myself with the current order flow, right? With the narrative part, right? This is the 2nd pillar. We're going to check whether we are in the top of the range or the bottom of the range. Next up, we have don't trade against equal highs or equal lows, because that's price telling us that maybe it's not ready to go lower, rather go higher. I tend to have a better win rate going by this rule, right? Next up, we have the zone, which is the holy grail zone. This is the multiple mitigation zone. Now, I'm going to go over the rule sets of how to determine what an is next, but we're just going to be looking at the sweep of the which is one of the entries, above or below, meaning that below a bullish one and above the bearish one. You can also enter on the double sweep. The confirmation entry is a buy stop or sell stop of the PCH or PCL of the lowest / highest closing bearish or bullish candle. And of course, I'm gonna explain this in greater detail, but these are the rules. You can copy it. Of course, it's my personal rules, what I found the most profitable and what you guys can find profitable too. So without further ado, let's look at what an zone actually is and how to trade it. So let's define it precisely now, what an actually is, right? To the core, it's a swing, right? A high and a low in a trend, right? This is essentially what it is. And for a bearish scenario, right, it's also the same, right? It's a swing. We're gonna take this swing, right? We're gonna look at it. How many touches does it have relative to the price action, right? It has 1, 2, 3 touches, right? With an what you want is 3 or more touches to validate it, right? To validate it for any potential entries. Now, with enough backtesting, of course, you can, kind of pre-fire with 2 touches. You can pre-fire the touch here to trade higher, but that's only after you build enough discretion in backtesting to be able to spot these kinds of trades. Now, an MM has 5 entries. Then what do I mean by that? It's the first, the tap, right? The second tap, the third tap. Now we have the sweep and the second sweep, which comes after the sweep of the first sweep. That's how it's defined. So it has 5 entries. Now, the entry that we're going to be focusing on is the tap and the sweep, right? These are the 2 most profitable entries if you can spot an MM correctly. And the underlying logic behind this zone, it's essentially a support and resistance area, just really defined in terms of structure, right? It actually uses structure. So obviously we're going to prioritize higher time frame MMs before lower time frame MMs, because the higher time frame always has priority over the lower time frame ones. As I said, it does provide 5 entries, right? It's the 3 bounces and the 2 sweeps. We know that the 4th touch of the MM is likely to fail. Now, as you can observe over here, we have 1, 2, 3 touches, and the 4th touch obviously failed, sweeping the entire zone. You must still adhere to SNZCE, as I said in the beginning, because a lot of people just mark out every single MM that possibly exists and trade it. They obviously lose a lot, and I want you to fix that, right? I don't want you to lose anymore. We're never going to long a zone at all-time highs or at top of the range, right? And same goes with the bearish PA. We're not going to short at the bottom of the range, right? So every MM sweep does not mean long or short, right? We know that it has to be tapping into a POI down below, for example, a swing to facilitate a move going higher. We know that there has to be a POI just below the sweep to go higher. Essentially what the market is doing is trading from an MM to an MM. And one important rule is an origin like this, a flip cannot be an MM. Even if it has multiple touches, it cannot ever be an MM. As I want you guys to do, backtest until you know which MM to use. Swing counts have nothing to do with that, just structure alone. So make sure to build that discretion to use MMs. Literally become the MM trader. And as I said, though everything is not an MM, don't take every zone as an MM. MM is a zone with multiple touches before price returns. This is essentially how it goes. You have that zone tapping multiple times, a sweep of that zone, a POI over here that we're trading into, and a trade going higher. Never ever try to trade against a higher time frame MM before it's liquidated. It's a higher time frame move, so the swing count on the M1 will be inconclusive. You can't trade the higher time frame MM judging just by the M1 alone. Let's go look at some of the MM examples. So looking at the example from before, we had bullish PA, right, where it's still adhering the SNZCE, right? So this is a high, a low, now putting it another high, another low, and this is another high being put in. Now, where is the next low likely to happen, right? It's in that swing point, right? In that second swing. And with that second swing, right, we're expecting a rejection to go higher, right? This is our narrative part. We also see a zone being mitigated here multiple times, 3 times. We're just going to play price action. We're going to actually see, and I'm going to walk you through the entry as it happens. So price came and swept that zone, right? We're going to take the highest closing, well, the lowest closing bearish candle, which would be this one. We're going to snap the stop loss to the low. And usually with these MMs, what you can do is risk 1.5 hour easily, right? They can obviously deliver much more, and it's up to you and your backtesting to figure out what works best for you. You place a buy stop order on that candle's high. Now we are tapped in that entry and we're gonna watch this deliver. So with these MM entries, make sure to really backtest this in depth, because you don't want to be stuck not knowing what to target, right? Target a fixed R. That's the easiest and most profitable way to reach that original goal that you set, the financial goal. With MMs, it's really nice because you can never really screw up genuine. right? If you're taking this zone as an example, you could have obviously, yeah, Ziga, this can be an MM2, right? This can be an MM2. Yeah, of course it can, right? We have 1, 2, 3 taps. The fourth tap delivered the 50%. And you have the sweep, right? Where is that lowest closing bearish candle, right? It's all the way up here, right? And what you did was just trail the lowest closing candle's low all the way to here. The POI was obviously a zone to the left, right? An MM being created, and you would have taken that buy stop for the 1.5 hour. And it's really hard to mess up which zone to take because it obviously is overlapping. When you have zones like that, it's really hard to mess up. But I would suggest a good rule of thumb is take the lowest zone with the highest amount of mitigation. So that's this zone with 1, 2, 3 mitigations. Another entry that we go over the live streams a lot is the 50% entry. After price validates our MM, it's most likely gonna tap the 50 and deliver a 1-to-1 just off of the zone alone. So let's go move on to a different example. And now you ask yourself, but Ziga, what do I consider as a tap? A tap is when price taps the zone and trades away from it. According to the MM size, it's gonna be different levels of taps, right? The taps have to be in accordance and adherence of the MM, right? It has to be mostly the same size. So a tap here would not be that little tap, but the tap here, right? Relative to the MM. So this is one tap. This is the second tap, right? They traded out of the zone. And this is now the third tap. The fourth tap can be used as a 1-to-1 entry. And look, you entered on the 50 with a limit and delivered perfectly. What do we see after the sweep? After the sweep is where our entry stands. We're looking at the lowest closing bearish candle. The lowest closing bearish candle, you would have just been trading, right? This is when it swept, it closed down below, and you would not be using this candle as an entry, but rather when price goes and closes below that candle. And we're going to be using this candle instead. What you can do is place that buy stop there after it closes down below and target whatever you want to target, right? You can target however much R you want, but I would suggest 1.5 R. So another great example of a good MM is here. We have the first tap, the second tap, the third tap, the fourth. Look at the fifth now. Fifth tap the 50% and delivered a 1-to-1. After the sweep, it's gonna be this candle, right? We're gonna be looking at, oh wait, let me just place a buy stop order on the lowest closing bearish candle, right? It's gonna be this candle and we're just gonna be trading. Okay, so price went and closed below that bullish candle. So that means the highest bearish candle is all the way here. What we do is place a buy stop limit, stop loss at the low, and target a 1R, right? We're just gonna be targeting a 1R here. What price does, goes and delivers perfectly. A good case study of what an MM should not be and when is it not valid is on July the 17th, right, Friday, yesterday, we had a sweep of a major higher time frame low. We were obviously in the bottom of the range, right? If you just go glance at the 1 hour, this was the sweep of the higher time frame range, right? And what we expected was price heading higher, right? We were in the bottom of the range and we were not expecting price to deliver any shorts, right? This was what you saw here was a zone being mitigated multiple times. And yes, the fourth touch did deliver the 50%, but the sweep was absolutely smoked. If you were to place a short on that bullish candle, you were tapped in and immediately the next two candles stopped out. Also, you should never really short against the V-shaped recovery. That's just a good rule of thumb to have, but you can learn more about that on my live streams. Which does bring me on to the next part, right? Using MMs as exits. So when trading to an MM, right, where is the best exit? The top of the MM, or well, the bottom here, is the first and the best exit when it came to longs here, right? This is the first exit. The middle of the MM is also an option. As you can see, the middle of the MM gets tapped and price trades away from it, right? So you can utilize the 50% of the MM as a good conservative exit. And the third, depending on how many taps are present and if the move was, brought to you by the TDA, you could also target the high/low of the right? The sweep, right? The sweep that we're looking for. In this case, right, the TDA was, we're going high. It was the bottom of the range. We swept a higher time frame important low, and our targets were higher. So that's where you could possibly been targeting that high of the So we know with DTFX concept, after a run of a high or low, price usually does what? Consolidate. And with that consolidation, what usually forms at that high of the range is an believe it or not. And what does it do after it sweeps? Trades back into the range or trades higher, which is really, really neat, right? Because now you know why you got stopped out. It was because that zone was essentially an And the good thing to really be aware of is don't care about volatility. You don't have to be scared of a volatile move going into one direction because the other can be just as volatile going higher, right? That sweep being the case, the buy stop. So don't be scared of volatility when price goes and sweeps your zone. Now, these are the results from my personal backtesting. It was 84% profitable across 541 trades, and all of these entries you can go and watch them in my free Discord, which you can join down in the description below. You can see that the number of entries per month is really, really high, especially if you know what you're looking for. You can get upwards of 3 entries per day just with alone. And for those seeking high occurrence entries, I would really suggest you take But if you want something that's more reliable, I would suggest SNDRs. So that was it for the entire video. It was a really fun one to do. Now let's recap everything that we went through. It was structure, narrative, zone, and confirmation entry. Now with the structure, you obviously want to mark out the highs and lows. The narrative, you want to know whether you're in bottom of the range or top of the range. With the zone, we now know what an is, and the confirmation entry is that buy stop model. If you've been watching my streams, you probably know that this is a really high probability zone, and I always surround my narrative around my So an zone isn't automatically stronger just because price keeps tapping it, right? Every touch of it eats into the liquidity of the zone. You actually grade it on the mitigation count, origin quality, and whether the narrative actually supports the zone. And this isn't some separate system, right? It's just a deeper layer inside the zone part of SNZCE. If you're still fuzzy on structure, narrative, entries, and zones themselves, you should definitely look into learning more about DTFX on my channel before worrying about zones as entries. If you want to actually know how I track this up, grading zones, the confidence scale, the whole journal, that's all free in my Discord under the resource tab, which you can join down in the link description. But if you want the full trading foundation guide, the kit that I personally made, you can visit my website and sign up with an email, which will grant you access to the kit. Appreciate you watching, follow your rules, and I'll see you in the next one.